let's go straight across to George Cherian, who's our banking editor, and get a sense of what is coming out of the macroeconomic review that has been released by the RBI. George, over to you.
Right, Nisha. So essentially what the document says, and the RBI stance this time around isn't as hawkish as it was in past quarters, but having said that, I don't think anyone can say that the stance is dovish either. What the central bank has said is that fiscal policy will have to work its way through in terms of addressing the huge supply side constraints that numerous sectors face, which will go a long way in addressing inflation. And in the interim period, while fiscal policy works on addressing those challenges, the stance of the Reserve Bank of India will be to ensure that inflation remains under control. So essentially saying, don't expect any sort of policy rate cut in the immediate term, but that those policy rate cuts will come when they do believe that what the center is doing is in the right direction in terms of addressing those supply side bottlenecks. Now it has also said that for going forward, the focus clearly will be on containing inflation, keeping inflation below levels, or trying to bring inflation to levels at which it is comfortable. And then it has said that it will at the same time try and address growth concerns, or try and lower policy within the available space that emerges basis what the central government does. So it is keeping its cards, it's keeping its options open. It isn't exactly saying that there aren't any rate cuts coming until we see inflation coming off meaningfully. What it is saying is that we need to see the central government move. The central government has, of course, been moving over the last last month and a half. But it has said that once it actually sees some movement, a strong movement over there, which is reflecting in things changing on the ground, you will see that being supported by rate action from the Reserve Bank of India. Now that's one important aspect, but the other thing I think to note over here is that the professional forecaster survey which the RBI conducts, and this is not an RBI number, this is a survey that RBI does of professional forecasters, where it has, it assesses a number of macro points, the GDP being one, that has been revised from 6.5% to 5.7%. So this is the professional forecaster survey which believes that growth in the current financial year is going to come in at 5.7% and not at 6.5%, which was the earlier estimate. Again, on the fiscal deficit front, while the official number that the government is working with is 5.1%, and you had the finance minister earlier this morning say that they will achieve 5.3%. The professional forecaster survey is talking about a number of 5.7% on the fiscal deficit front, so that doesn't look very good. However, on the current account deficit front, while the government says that they will come down to 3.7% by the end of this financial year from a level of 4.2% in the last financial year, the professional forecaster survey is being a little more optimistic. They're talking about a number of 3.5%. But coming back to the path forward and the signals really coming out from the Reserve Bank of India, I think it's safe to assume that you aren't going to see any action on the repo rate front tomorrow. CRR, possibly you could see some action over there. That's what everyone's been talking about, possibly a quarter point cut on the CRR.
So those are the expectations that have been built up, but talk about the pressure that has been built by the finance minister just today. Yes, we know that professional forecaster survey says that the growth is not going to be too good, it is going to be down, and inflation has been sticky. But on the other hand, finance minister has said today that he is looking at putting the fiscal house in order. So he is doing his bit, while a rate cut is something that should be expected.
Sure. Nisha, I think you need to look at it in the context of what exactly the finance minister said this morning. The Kelkar committee report was presented to the finance ministry in the first week of September. The finance ministry has come out and held this press conference in the last week of October, just a day before the RBI puts out its second quarter review of the monetary policy. So that somewhere sends you, I think it's very easy to read into into what the central government has done by setting a press conference just a day before the monetary policy review and talking about a fiscal consolidation plan, which I don't believe, I think anybody buys that as a plan. It's a statement of intent on the part of the finance minister. He hasn't spelled out in detail how he's going to achieve those numbers. All he said is that he's going to achieve those numbers. So that press conference he held this morning, I think, is nowhere convincing for anyone who tracks this space, and more so for the Reserve Bank of India. So I think just because the finance minister has held a press conference this morning and said that, we are going to get down to 3% fiscal deficit by FY17. I don't believe the RBI is going to work on the basis of that and then, decide, oh, the finance minister said this today, so let's cut the repo rate by a 0.5 percentage point tomorrow. That's very unlikely to happen. Simply because the finance minister hasn't exactly said how he's going to achieve all of this. He's talked about those pro-poor programs going to remain. He's not, addressed the fact that there is massive expenditure leakage on those programs that the government puts out. He's talked about, the need to address fuel subsidies. He's talked about disinvestment. He's talked about 2G receipts. But all of that put together is something that all of us already know about. In terms of explaining to everyone how he's going to achieve the numbers going forward beyond FY13. He didn't have answers when questions were asked to him about that issue. I think he dodged most of those questions. So I don't think anyone is convinced in terms of how those numbers are going to be achieved, that those numbers are going to be achieved or that those numbers will be worked upon in order to be achieved is something that everyone agrees to. But how you're going to achieve it is the big challenge. And I think the RBI will be looking for answers to that. So I don't believe that today's press conference in any way is going to change the RBI's stance and make them start lowering policy rates. But having said that, it is somewhere being viewed as political pressure being trying to be exerted upon the Reserve Bank of India, where the government says that, look, we are working on some things over here. You guys also need to help us out and start lowering start lowering interest rates. So I think that may have been the thinking within the finance ministry, but it may not be reasonable to assume that because of today's press conference, the RBI will oblige the centre.